that 99% of traders don't follow is the simplest of them all, and yet it's the hardest one to keep. Do you know what it is? It's the rule of sitting tight, not the rule of getting in, not the rule of finding the tip, not the rule of reading the tape, but the rule of doing nothing once you're right. And nothing, my friend, is the hardest thing in this game. Every trader wants to trade. Every speculator thinks the business of speculation is buying and selling, hopping in and hopping out, catching this wiggle or that jiggle. But I'll tell you plain, the money isn't in the buying and the money isn't in the selling. The money is in the waiting. How many times have you been right in your judgment and wrong in your pocketbook simply because you couldn't sit still? Be honest with yourself now. How many times? You see, a man can read the tape correctly. He can sense the market tone. He can smell the trend starting. He can be dead right. And yet, by selling too soon, he makes just a crumb of what he should have made. Or worse, he jumps back in because he thinks he missed the real move, and that's when the market takes him by the collar and throws him against the wall. The market punishes the restless. Did you ever notice that? The market takes pleasure in teaching lessons to the impatient. Now let me tell you a story. Years ago, when I was just a boy in the bucket shops, I used to scalp points here and there, nickel and dime profits. I thought I was clever, and in those bucket shops, being quick, being nimble, it worked for a time. But when I graduated to Wall Street, the real game, I tried to play the same tricks. And do you know what happened? I lost. I lost because the real game isn't about catching pennies. It's about catching the big swing. And you don't catch the big swing by jumping in and out like a jack in the box. No, sir. You catch it by getting in right and then sitting tight. But sitting tight isn't natural. It goes against a man's instincts. A man wants action. He wants to feel he's doing something. The minute the price goes against him a little, he feels he has to act. Or the minute he has a small profit, he feels he has to take it before it slips away. Tell me, haven't you done it yourself? Haven't you cut a profit short just because you were afraid it might disappear, and then watched the stock march on without you, leaving you standing on the curb while the parade went by? The rule 99% of traders don't follow is the rule of letting the market prove you right. Not half right, not almost right, but fully right. That means you must wait. You must give the market time to develop, and that's where most men fail. They don't give the market time. They want the profit now, this minute, this hour. They don't want to endure the waiting. And that's why most men never make the real money. I'll tell you another thing. Most traders think the danger lies in being wrong. They think the great risk is in making a losing trade. But the truth is, the greater danger is being right and not making the money that rightness should have given you. Because being right in direction, but wrong in execution, that is the bitterest pill a trader can swallow. And haven't you tasted that bitterness yourself? Haven't you felt the sting of selling too soon and then seeing the stock go exactly where you knew it would go? Listen to me. The market doesn't reward brains as much as it rewards character. You can know everything, you can read everything, you can calculate everything, and still fail if you don't have the character to follow the one rule almost nobody follows. The rule of staying put. Character is what lets a man endure the hours when the market tests his patience. Character is what keeps his hand from reaching for the sell button just because he's nervous. Do you have that kind of character? That's the question you have to ask yourself. You see, when I talk about sitting tight, I don't mean being stubborn in a losing position. Never confuse the two. If you're wrong, you must get out. Always. The first loss is the best loss. But once you're right, once the market confirms your judgment, then your job isn't to do more, it's to do nothing. And nothing, as simple as it sounds, is the hardest work in speculation. I remember in 1907, during the panic, I made millions because I sat. I was short, and the market was breaking, and every instinct in me said, take the money. Cover. Don't be greedy. But I didn't listen to those instincts. I listened to the rule. I sat. And the sitting made the millions. That same year, I saw others who were right but couldn't hold. They took their profits too early, and they left the big money on the table. They let fear rob them. Isn't fear the enemy of every trader? Fear and hope. That's what ruins most men. They fear when they should hope, and they hope when they should fear. A man holds a losing stock because he hopes it'll come back, and he sells a winning stock because he fears it'll slip away. Do you see how upside down that is? Do you see how most traders live backwards in the market? Now think about your own trades. How many times have you sold too soon? How many times have you snatched a profit like a beggar snatching a crust of bread while leaving the banquet untouched? And how many times have you held onto a loser because you hoped it would turn around? If you're honest, you'll admit it happens more often than you'd like to count. And that, right there, is why 99% of traders never succeed. The rule is simple: cut your losses quickly and let your profits run. But tell me how many really do it. How many really let their profits run? Almost none. They talk about it. They nod their heads when they hear it. But when it comes to living by it, when it comes to practicing it in the heat of the market, they fail. They fail because they lack patience, they lack discipline, they lack the steel nerves that speculation demands. Do you think you have those nerves? When I was younger, I used to think the market was about intelligence. I thought if I studied hard enough, if I observed carefully enough, if I kept my mind sharp enough, I could outsmart the market. But over the years I learned the market doesn't pay for cleverness. It pays for waiting. It pays for endurance. It pays for the man who can resist the urge to trade just for the sake of trading. Are you that man? Or are you like the 99%, forever restless, forever jumping in and out, forever grabbing at pennies while leaving dollars untouched? You have to remember, the market is like the ocean. You don't make your fortune by splashing at the waves. You make it by riding the tide. But to ride the tide, you must have the courage to wait. You must have the faith in your judgment, the faith in the trend, and the strength to hold fast while others are shaken out. And believe me, the market will try to shake you out. It will wiggle and wobble. It will tempt you to take small profits. It will scare you with small reactions. And if you let yourself be deceived by those minor moves, you'll miss the major move. Haven't you felt the temptation yourself, the temptation to grab at the little profit, the fear of seeing it slip away? The truth is, the market is designed to fool the majority. It's designed to test the patience of men. That's why 99% don't follow the rule. They can't. They don't have the patience. They don't have the discipline. They let their nerves get the best of them. And so they buy when they should sell. They sell when they should hold. They hope when they should fear. And they fear when they should hope. Isn't it strange how men repeat the same mistakes over and over again? The rule 99% of traders don't follow is so simple that it sounds almost foolish when you say it out loud. Sit tight. That's it. But think about it. How many men in your acquaintance actually do it? How many traders do you know who rode a stock from its birth to its boom without getting off too early? Almost none. They all get nervous. They all cut short. They all spoil their own game. And yet, if they'd only followed that one rule, they'd have fortunes instead of regrets. Now, don't misunderstand me. Sitting tight doesn't mean sitting forever. It means sitting until the market shows you that your judgment is no longer correct. It means holding until the trend changes, not until your nerves give out. And that difference is everything. Most men sit until their nerves break, not until the market breaks. And that's why they fail. So ask yourself this: when the next big move comes, when you're in right, will you have the nerve to sit? Will you have the patience to let your profit swell into the kind of profit that changes your life? Or will you, like the 99%, grab at crumbs and leave the feast untouched? The market pays for patience, not cleverness. That's a truth most men in this game never understand until it's too late. Everybody wants to be clever. Everybody wants to feel they're the smartest fellow on the floor, the one who saw something others missed, the one who caught the turn by a hair's breadth. But cleverness is overrated in speculation. You can be clever 10 times in a row, and yet if you lack patience on the 11th time, the market will take back everything you made and more. Patience, on the other hand, is dull, it isn't flashy, it doesn't win applause. But patience is what turns a correct judgment into real money. Tell me, haven't you seen traders who were right but couldn't wait, and so they spoiled their own profits? I've watched men walk into the market with all the brains in the world, men who could calculate to the 8th decimal, who could recite balance sheets backwards, who could analyze a company's prospects down to the last copper tack. They were sharp, no doubt about it, and yet they never made the real money. Do you know why? Because they couldn't sit still. The minute the stock ticked against them, they grew uneasy. The minute it ticked in their favor, they snatched at the small gain. Their cleverness didn't save them, because the market isn't a puzzle to be solved. It's a tide to be ridden. And tides don't care about cleverness. They reward the man who has the nerve to wait. Patience is what separates the professional operator from the gambler. The gambler wants action. He's restless. He's always looking for the next bet, the next thrill. He thinks activity equals profit. But in speculation, activity often equals ruin. The operator, the man who lasts, he knows his edge isn't in constant trading. His edge is in waiting for the big opportunity and then holding on when he's right. That requires patience of the kind most men can't muster. Do you think you have it? Cleverness gives a man ideas, but patience gives him profits. I can't count the times I've been in a stock and seen the quick boys grab their little point or two and be gone, feeling smug about their neat trick. And then the stock would run 20, 30, 50 points, while they stood outside watching, wishing. Their cleverness gave them crumbs, my patience gave me loaves. And yet most traders still chase cleverness. Why? Because cleverness flatters the ego. Patience humbles it. You have to understand, the market is designed to tease cleverness. It offers 100 small moves every day, plenty of chances for a man to show off his nimbleness. But the big swing, the move that makes fortunes, comes rarely, and it takes time. It requires a man to hold his position through all the little jiggles and jolts that tempt him to act. Cleverness jumps at those jiggles. Patience ignores them. Patience says, the real move hasn't finished, the trend hasn't ended, the game isn't over. And that voice of patience is the one the market pays in the end. Haven't you ever felt the tug to close out early, only to regret it when the real move revealed itself? I'll tell you, the most money I ever made wasn't because I was cleverer than the other fellow. It was because I sat longer. In 1929 I saw the market breaking. I was short. My judgment was correct, but if I'd let cleverness dictate, I would have covered too soon, thinking I'd made a neat turn. Instead, I waited. I held my ground. I let the market unravel in its own time. And that patience gave me profits that cleverness alone could never have delivered. Cleverness makes a man feel he's doing something. Patience makes him feel he's doing nothing. And most men can't stand the feeling of doing nothing. They itch to act. They can't bear the silence, the waiting, the sitting. But speculation is a waiting game. You wait for the right setup. You wait for the market to confirm, and then you wait for the move to unfold. Most men fail at one of those waits. They get in too soon, or they get out too soon. The man who succeeds is the one who waits through all three. Do you have the temperament to do that? Another thing, cleverness makes you fight the market, while patience makes you follow it. A clever man wants to pick tops and bottoms. He wants to be the hero who calls the turn. But the patient man waits until the turn is clear, until the market itself shows its hand, and then he rides along, without ego, without the need to be the smartest in the room. Who do you think the market rewards more, the man who fights to outsmart it, or the man who patiently follows its lead? Patience isn't just about holding profits. It's also about waiting for the right opportunity before you risk your capital. How many traders throw money at second-rate chances because they can't bear to sit idle? They think they have to be in the market all the time. But the truth is, you don't make money by being in the market constantly. You make money by being in the market correctly, and that often means waiting on the sidelines in cash, doing nothing, while others are busy chasing shadows. Patience to stay out is just as valuable as patience to stay in. Have you ever thought about that? The problem is, men confuse patience with weakness. They think if they aren't acting, they're failing. They feel useless if they aren't pressing buttons, making trades, doing something. But patience is the strongest position a trader can have. It takes far more strength to wait than it does to act on impulse. It takes far more nerve to hold your ground than to snatch at a small gain. It takes far more confidence to sit tight than to keep fiddling with your position. That's why I say patience is strength and cleverness is often just vanity. And let's not forget, cleverness is finite, but patience is renewable. A man can exhaust his cleverness, he can run out of ideas, he can burn himself out with constant scheming. But patience, if cultivated, never runs dry. It's a well that keeps giving. You can always wait. You can always refrain from acting. And in that restraint lies your edge over the 99% who can't help themselves. Doesn't it strike you as ironic that doing less often earns more in this business? You must train yourself to prize patience above cleverness. When you feel the itch to trade, just because you think you've spotted some clever setup, stop and ask, is this really the big move? Is this the real tide? Or am I just being drawn into the daily noise? And when you're in a winning position, and cleverness whispers, take the profit before it slips, remember that patience says, the market hasn't finished yet. Let it pay you fully. Which voice will you listen to next time? The truth is, cleverness makes headlines, but patience builds fortunes. People love to tell stories of the clever trade, the smart call, the neat trick. They boast about catching a turn by a fraction of a point. But those same men are often broke a few years later, while the quiet, patient operator, who nobody notices, is the one who ends up wealthy. Which kind of trader do you want to be, the one with the stories, or the one with the fortune? Patience is the real intelligence in speculation. It doesn't look clever, but it outperforms cleverness every time. It requires humility, it requires discipline, it requires strength of character, and that's why so few practice it. But for the few who do, the market pays, and it pays handsomely. Fear and hope destroy discipline in opposite ways. That is the paradox of speculation, and it's one of the hardest truths for a trader to face. Fear and hope, the two strongest emotions in the market, work against a man at exactly the wrong times. They make him do the opposite of what he should. When he ought to cut loose a losing position, he hopes. When he ought to ride a winning position, he fears. And so he ruins himself, not because he lacked information, not because he lacked intelligence, but because he let fear and hope do his trading for him. Tell me honestly, hasn't that happened to you more times than you'd like to admit? I've seen it thousands of times. A man buys a stock, it drops a little. Instead of facing the loss, he says to himself, it will come back. It must come back. That's hope talking. He holds on, and the loss grows larger. His hope grows more desperate. At the end, he's ruined not because he was wrong at the start, but because he let hope chain him to a sinking ship, and the same man, in another trade, will be in profit, will have judged correctly, will be in the position to win big. And yet he sells out at the first sign of hesitation in the stock. That's fear talking. Fear of losing what little he's made. And once again, he cheats himself out of what should have been his real reward. Haven't you ever sold too soon out of fear, only to watch the stock climb higher without you? Fear and hope are enemies of discipline, and discipline is the backbone of speculation. Without discipline, a man cannot follow rules. Without discipline, he cannot act against his feelings. And in this game, acting against your feelings is half the battle. Your feelings will always push you the wrong way. They will tell you to hope when you should fear, and to fear when you should hope. Discipline is what lets you ignore those feelings and do what you know is right, not what you feel is right. Do you have the strength to do that? It's not easy. A man has to train himself to reverse his natural impulses. Think about it. When a stock is going down, every fiber of your being wants to believe it will turn around. You tell yourself stories, you justify, you cling to hope. And yet, the right move is to get out, to take the loss while it's small. That takes cold discipline. And when a stock is going up, and you're sitting on a profit, every nerve in your body screams, take it, Don't let it slip! That's fear at work. But the right move is to sit tight, to let the profit grow, to wait for the real move. Again, that takes discipline. You have to do the opposite of what your feelings command. Can you? The market is the greatest psychologist there is. It knows your weaknesses better than you do. It plays on your fear when you're winning and on your hope when you're losing. It dangles little profits to tempt you into selling, and it whispers promises to keep you in losers. That's why 99% of traders fail. They don't master their emotions. They think speculation is about tips or charts or systems. But it's about mastering fear and hope. Do you think you can master them, or will they master you? I remember one operator, smart as they come, but he never made it because he couldn't handle fear and hope. I watched him hold onto a sugar stock that dropped day after day. He kept saying, "It'll rebound, it can't go any lower." That was hope deceiving him. He lost heavily. The same man, a year later, bought steel on my advice. It climbed steadily. He had a real winner. But at the first setback, a mere dip in the uptrend, he panicked and sold out. That was fear tricking him. He missed the real profit. In both cases, it wasn't the market that beat him, it was his own emotions. Haven't you seen yourself fall into that same trap? The truth is, hope belongs outside the market. Hope is for your family, your future, your dreams. But hope has no place in speculation. The market doesn't care about your hopes. It doesn't rise because you want it to rise. It doesn't turn around because you need it to. Bringing hope into speculation is like bringing a candle into a storm. It will flicker out and leave you in the dark. And fear, too, has its place. Fear keeps a man alive in dangerous places. But in the market, fear of losing profits makes him sell too soon. Fear of being wrong makes him hold too long. Fear of missing out makes him jump into bad trades. Fear in the market is always misplaced. Do you see how both emotions lead you astray? Discipline is the cure, but discipline is the hardest thing to build. You can't buy it. You can't borrow it. You have to forge it by losing, by learning, by enduring the sting of your own mistakes until you finally see the pattern. The pattern is always the same. Fear cuts your profits short. Hope makes your losses long. Once you see that, you begin to fight back. You begin to make rules for yourself. Cut losses quickly. Let profits run. Follow the trend, not your nerves. But even then, the test is constant. Every day the market will try to make you forget your rules. Every day fear and hope will whisper in your ear. Will you listen to them, or will you listen to your discipline? I've said it before, and I'll say it again, the average trader lives backward. He fears when he should hope, and he hopes when he should fear. He clings to losses and sells out of profits. He does it because he lets his emotions run the show. And until he reverses that habit, he will never succeed. The successful trader is the one who fears big losses and cuts them, who hopes for big profits and holds them. He has trained himself to do the opposite of what comes naturally. That's what discipline is: unnatural action repeated until it becomes second nature. Are you willing to put yourself through that kind of training? The market punishes hope in losers and punishes fear in winners. That's the law of speculation. And until you accept it, until you see how those emotions sabotage you, you'll remain part of the 99% who never learn. The men who master themselves are the men who master the market. Everyone else is just grist for the mill, and the mill grinds without mercy. A trader's character matters more than his brains. That's a hard truth, and most men in speculation don't like to hear it. They think this game is about intelligence, about cleverness, about who can calculate faster or analyze deeper. They think the market pays for brains. But I'll tell you from experience, the market doesn't pay for brains, it pays for the right character. Brains can tell you what to do, but only character makes you do it. And doing it, not knowing it, is what makes the difference between success and failure. Haven't you ever known exactly what you should do in a trade, but lacked the will to follow through? Brains will tell you a stock is weak, that it's time to cut your loss, but character is what makes you pull the trigger. Without character, you'll hold and hope, even while your brain screams the truth. Brains will tell you the market is trending, that your judgment is correct, that the profit is in your hands if you just sit tight, but character is what makes you sit. Without character, you'll snatch at the small gain, betraying your own intelligence. Do you see what I mean? In speculation, brains without character are useless. I've seen it play out 1,000 times. Men with more knowledge than I ever had, men with university degrees, men who could explain every theory under the sun, and yet they couldn't make a dime in the market. Do you know why? Because their character was weak. They had no patience, no discipline, no control over fear and hope. They knew, but they couldn't act, and the market doesn't reward knowing, it rewards acting. How many clever men do you know who are broke, while duller fellows who had stronger character ended up rich? Character is what gives a man patience. It's what keeps him steady while others are restless. The impatient man, no matter how clever, will jump in and out, grab crumbs and miss the real move. The man with character will wait, will endure the temptation, will sit still when sitting still is hardest. And that's how he makes the big money. Isn't it true that your hardest trades are never the ones you didn't understand, but the ones you couldn't hold? Character is also what gives a man courage. The market tests your courage every day. It throws you losses, it throws you false moves, it tries to shake your confidence. A man without character folds under that pressure. He listens to tips, he listens to rumors, he gets rattled by every jiggle in the tape. But a man of character trusts his own judgment and has the courage to stand by it. That doesn't mean stubbornness, it means strength. Stubbornness is holding on when you're wrong. Courage is holding on when you're right. Do you have the courage to distinguish between the two? Brains can see an opportunity, but only character can seize it. I've seen traders spot the big move before anyone else. They were right, dead right. But when the moment came to act, they hesitated. They second-guessed themselves. They let fear or greed paralyze them. The move came and went, and their brains counted for nothing. Another man, perhaps not as sharp, but with the character to act boldly and decisively, took the trade and reaped the reward. Haven't you ever watched an opportunity pass you by because you lacked the nerve to act? Character shows itself in how a man handles losses. Everyone takes losses. Even the best operators are wrong. But what does the average man do? He denies it, he hides from it, he lets hope blind him. That's weak character. The strong man takes the loss at once, without hesitation. He admits he was wrong, he pays for his mistake, and he clears the slate. That kind of character keeps him alive in the market long enough to catch the next big opportunity. The weak man clings to his losses until they sink him. Which kind of man are you when your trade goes against you? Brains can design systems, draw charts, study fundamentals, read the tape. But character is what keeps you from breaking your own rules. The market is full of traders who have good methods but can't stick to them. They know the right principles: cut losses, let profits run, don't overtrade, but they violate them again and again because their character isn't strong enough to resist temptation. It's like a man who knows gambling odds but can't stop playing. Do you see how little brains matter without character to back them up? A trader's character also shows in how he handles success. Oddly enough, making money can ruin a man faster than losing it. The weak character grows overconfident after a few wins. He thinks he's invincible. He increases his risks, he ignores his rules, he feels smarter than the market, and then the market humbles him, and he loses it all. The strong character, on the other hand, stays humble. He doesn't let success cloud his judgment. He knows the market is bigger than him, and he respects it. Haven't you seen traders who soared quickly, only to crash because their success went to their heads? Brains are common in speculation. Plenty of men are clever. Plenty of men can analyze. But strong character is rare. That's why most traders fail. They think brains will save them, but when the market tests them, they discover that knowledge without discipline is worthless. The market doesn't care how smart you are, it only cares whether you can act correctly under pressure. And pressure is where character, not brains, decides your fate. Think about the rules of speculation. They're simple, aren't they? Cut your losses quickly. Let your profits run. Never average down. Don't overtrade. Follow the trend. Any man with an ounce of brains can understand them. But how many actually follow them? Almost none. Why? Because following them requires character. It requires patience to wait, courage to cut losses, humility to admit mistakes, strength to hold winners. Those are qualities of character, not intellect. The rules are easy to learn, hard to live by, and that gap between knowing and doing is where 99% of traders lose. Haven't you ever broken your own rules, knowing full well what the cost would be? When I look back at my own career, I don't remember the clever insights as much as I remember the tests of character. The times I had to sit tight while the market tried to shake me out. The times I had to take a painful loss instead of clinging to hope. The times I had to trust my judgment when everyone else doubted. Those were battles of character, and winning those battles was what made the difference. Without character, I'd have been just another clever man who went broke. Brains might get you into the game, but character keeps you in it. The market will test you over and over, not on what you know, but on what you can endure. It will tempt you to abandon your rules. It will test your patience. It will prey on your fear and your hope. And the only shield you have is